I can see that you're
all right. We are live on Facebook. Hopefully this time we almost had a little issue right there.
Woohoo!
Okay, we are live on Facebook. All right, woo, we did it, guys. Sorry, we are a little bit late, but again, it is Thursday's Top Tips in Real Estate, and we are super excited to be here with you guys. We have a great topic to speak about this today. It is new construction versus resale, and people are very interested in this whole topic. It's a great topic to touch on because we know that real estate is on fire right now, right, guys? And people are interested in new houses and, you know, the resale ones as well. So it's going to be a great topic. I'm excited to hear what these amazing professionals have to say about it. And then we will go into it right now with starting with Alannah. So I will highlight your screen.
All right. Very good. All right, cool. I think that clicking might actually be me. Excuse me, by the way, if you hear my dog in the background, he's very famous.
We love dogs.
So, all right. So I'm really excited about this topic today. I've been looking forward to this all week. So we're going to dive right into it because there are pros and cons to both new construction and to resale. Let's start with new construction. The pros are obvious. Your materials are brand new. You're probably getting the best, you know, grading of windows for insurance, the best, you know, materials for your roof. You're getting what's going to save you money in little ways into your mortgage, which is really great. You know, they also have warranties for some new construction. Some builders honor those. In addition, you're getting new appliances, et cetera, et cetera. The cons to new construction, you know, typically center around the lot sizes because the communities that are being built now, unless you're, of course, you're building on a lot in an older community in Port St. Lucie or Martin. There's not a whole lot of growth happening in Martin anymore, so we'll stick with St. Lucie. If you're buying and purchasing and building in an older community, your lot might be bigger, but generally it's going to be pretty small. And you also don't really have the ability to have a pool built with your property. You know, that's one of those things, you just don't have that flexibility. You're going to be taking out a separate mortgage and your builder's going to have you do it after the fact. You know, resale gives you the opportunity to have both of those things, and your trade-off might be that the home's a little bit older. You might have some updates to do or some like projects left undone, you know, if the last seller started something they didn't finish. And, you know, you kind of got to decide what are you willing to move into and what are the things you want. Does your budget reflect what you need? So, you know, the pros, though, to resale, there's so much character in a resale house that sometimes you don't have that flexibility with a new construction. You know, their layouts, they do have several, but you got to stick pretty close to the script. And if you want to make changes, you have to add them after the fact. So that's my really quick, you know, kind of breakdown of the pros and the cons of, you know, resale and new construction. So I'm going to let it get back to these other hot shots here because they've got a lot of great stuff to share with us. So I'm going to stop my share now.
Awesome. Thanks, Alannah. That was great. Great information. All right. So next we have Codi. So I'm going to share your screen, Codi. Or not share your screen, but spotlight your video.
All right. Yeah, please forgive me. I don't have a
that's okay.
But I mean, my thoughts are like, you know, new construction. I guess the pros would be that, you know, you can build it the way that you want it. You can personalize the home. You know, they use new materials. It's up to code. You know, higher code than resale houses. You know, whereas, you know, even with resales, you can personalize those also. It's just that you gotta add extra money into the mix. You know, whereas it's all included in your initial investment in the new home. So, you know, the other thing is, what am I trying to say here? Basically just the ability to personalize a new home as opposed to, you know, a resale. A resale is just going to cost you more money, and it's a lot more involved with trying to personalize a resale. So that's my perspective.
Awesome. Thank you, Codi. That's what I love. We get everybody's different perspectives on it all. Jessica, you're up.
Hello. Thanks, Lucy. So hi, everybody. My name is Jessica Taylor. I'm with Keller Williams Realty. So I have very strong feelings about both resale and new construction. I kind of started out my career in the new construction type of business. So I was just like, hurrah, new construction. I just had somebody pass by my office. Anywho, so I'll get started with the pros of new construction. First, it's very personalized. It's limited, but you can pick out exactly what you want, from like the flooring, the type of appliances, to the color of the paint, to the type of trees that you want added into the backyard and things like that. And usually most of the new construction homes are energy efficient, and that in the long run and both in the short run, it's going to help save you money with your energy bills, your FPL bills. And generally there will be less maintenance that you have to do in and around the house, just because you know for a fact that the new building is up to code and everything like that. And you know, we have very strong building codes in South Florida. We have, sorry, just got a phone call. Oh my God, real estate, come on. Jeez Louise, what a crazy day, right? But anywho, so like I was saying, we have very strong building codes. So you know for a fact that it is your new home will be up to code. And usually these new construction houses are in these master plan communities. So you're not only building a home, you're kind of inserting yourself into a lifestyle, which is pretty cool. So that's like all of my pros for the new construction. And then so on like the downside is that you have to make sure that you get a really great reputable builder and know that they have a really great reputation, and you know, so you can see their history, you know, what happened to those homes and everything like that. And you also want to do your research on the type of programs, the financial programs that they offer, because they might not be the best for you right now at that moment. So that I always say, you know, continue working with your mortgage broker, your lender, and your realtor as well. So then I want to go on to the resale homes. My favorite part about resale homes is that they're a little bit closer to like the city, even though there might be a little bit outside. And so that commute may be a little bit shorter versus the newer communities that are a little bit farther out of the city usually. And also the lush landscape, because you know, if you move into a home that was built in the 60s and 70s, you know, you have beautiful oak trees and just beautiful landscape that you would have to wait, you know, 20 years from now for a new home, new construction home to be built like that. And so at the end of the day, it all just depends on the timing of when you want to move. If you want to move, you know, right then and there, or if you want to have some patience and have something built in about 6 months or so you can just move right in with your toothbrush. Or, you know, if you want to have that comfortable living space with the nice lush landscaping, but you have to think, you know, keep in mind that you might have to do some updating to that resale home. So I always say write a good pros and cons list and then work with your realtor and your mortgage lender to get the best choice. So back to you, Lucy.
Awesome. Thanks. I feel like I'm on newscast. Here I am.
There you go.
The weather today is, we don't know. No, I'm just kidding.
Right.
Poorly.
But no, that was some great information, Jessica. I liked how you laid that out. And it's good to know that you came from a background that was new construction. So you kind of have that good insight on it. So you guys just heard from realtors and their perspective on what they think with new construction versus resale. Now we're going to go to the lending side and hear from some professional lenders and what they think from the lending perspective. You know, what's the pros and cons. So going into Amanda, I will spotlight your video now.
Thank you, Lucy. I don't think I'm muted. No. Amanda Foster, loan originator with the Sterling Mortgage Group, that's part of Element Funding here in Stuart, right by the Roosevelt Bridge. Yay, I was going to just touch a little on the new construction, and from a lending point of view, the parameters around construction loans. Typically, the construction loans are a one-time close. So that's great for clients if they do decide to go down that route and build their own property. It can be that they're purchasing land as part of the loan and build, or it may be that they own land free and clear already and want to build on that. So they can do a one-time close construction loan. The way in which it works is that typically both the client and the builder have to get lender approval. So the client needs to do a lot of research to make sure that the builder that they want to use to construct the home for them is a reputable builder, because they do have to go through a lot of procedures to be approved by the lender before the loan actually can be approved in full. Typically, you can have a conventional one-time close, and you can also go down the FHA government route as well. At the moment, though, especially with ourselves, conventional one-time close construction loans are on hold, and that's purely because of all of the restrictions around the COVID. But the FHA construction loans are still out there and running at the moment, and they're good if that's the route a client wants to go down. A client gets underwritten right at the start, so before the construction starts, the client is fully approved, and they can also lock in the rate. So if anything changes with interest rates while the home's being built, their rate's secured, because once the construction's completed, it converts to a permanent loan. The client has the interest rate that they locked before the build, and they don't get pre-approved. So if any circumstances have changed, they've already been approved prior to construction. And another little tidbit is that during construction, the client just pays interest-only payments, and they pay those on the amount of money that's drawn. So they draw money in stages with the builder as the build goes along. So that's my little 2 pennies worth from a lending on construction.
Wow, that was great. Great information. Thank you. Loving it. Dana, you are up.
Hi, everyone. Am I here? Can you hear me?
Yes,
Okay, there I am.
there.
Hi, I'm Dana Mainenti from Guaranteed Rate Affinity. I am going to give you my 2 cents on this. So with new construction, there are a lot of great products. There are a lot of great incentives. A lot of times the builder can give you cash towards closing costs. So what I would recommend is for you to take the loan summary that they're giving you and also compare it to a local lender, because that lender, the in-house lender that will give you the cash towards closing costs, works for the builders. So there are times that the money that they're giving you is in another place. So it might look like it's free money, but you're paying for on a different side. So my advice to you is to compare a preferred lender from the builder and a local lender. Another option for a resale home, like everybody was saying, you know, it might not be the style that you want, and with a new build, you can customize it. A third option to that would be a resale home and using a renovation loan. So that means that you can customize it. You can replace a electrical panel. You can use it for upgrades in the kitchen. And it's the same minimum down payment as an FHA 3.5% and a standard conventional loan. They have options where you can run the project like a general contractor if the repairs are under a certain dollar amount. And then if they exceed a dollar amount, then they do advise you to have a general contractor oversee the project. But it is a wonderful solution to have that lush landscape that Jessica was telling us about, and also the upgrades that you want while you know, looking into a resale. The last tidbit that I do want to bring up again is just on a new home, they base the property taxes on the lot, and lot property taxes are going to be less than when a home is built on it. So it will be a big jump from once you purchase it as new construction to the next year when your taxes get assessed as a new home. And that does impact your monthly mortgage payment. So be sure to have them give a projected amount of taxes from the builder and find out how that will affect your monthly payment. So that's all I have. Thank you.
That's awesome. I'm glad you brought up the fact of renovation loans. That's a great point to hit. All right, Carol, you're at.
Oh, there's no more realtors?
No. So yeah, a couple of people have dropped.
Okay. I wasn't ready for that, but hi, Carol Dols here with Gateway Mortgage. I'm gonna kind of piggyback off some of the things that both Amanda and Dana touched on. Here at Gateway, we are still doing our conventional construction loans for new construction up to 95%. So if you already have your lot or you want to buy your lot and build on it at the same time with your builder, we have a minimal review process for the builders here. One of the things that Dana touched on about the estimated taxes on the new construction, also keep in mind if you're buying a new home versus an older home, on the new home, the homeowner's insurance is going to be significantly lower than on the older homes because of the what's the word that I'm looking at? The building codes have changed. So the newer homes are more constructed better for the hurricane. So a lot of the premiums on the older homes have gone up significantly because of the hurricanes that we had last year. Also, what's I going to touch on? The renovation loan's a good product too, especially if you find something that you want a new kitchen or a new bath, we can do that as well. And keep in mind that the construction can take, if you're building it on your own lot, it can take anywhere from 6 to 12 months. So you need to factor that in. Or if you're getting a builder, the builders build spec homes. What a spec home is, it's something that the builder's already built on a lot that they've already bought in the older part of town, not in the gated community or tract of land. So that's another option with new homes, is getting a brand new home that's already built by the builder with their money. You get an end loan, which is the same as you would be financing on the resale. And now up to Gail.
Awesome. Gail, you are spotlighted.
I am here. Hi, everybody. Gail Kleemann with Academy Mortgage. And I am going to share my screen here. Let's see. And I just want to tell you, I am super excited about this topic with builders and construction loans, because actually one of the big reasons I moved over to Academy Mortgage is because of the strong builder relationship they have in the construction loans. So kind of in a nutshell, the programs that we do are conventional 5%, FHA, VA, and we also do USDA construction loans. So there's a couple options here to get in with 100% financing. We can do it on a CBS built home or even a manufactured home. And like the others have said, it's a one-time close, so you're not paying extra in closing costs. We lock the loan up front, and we actually have a really nice feature as a float down. So once the house is completed, if the rate is better, then they can actually go for that lower rate. But at least I tell people it gives you your worst case scenario. You know exactly what you're getting into. We use like 1.25% of the purchase price to estimate taxes. At least it's not as low as, ridiculously low as the lot taxes. But so it gives them a better idea of what their payment's going to be. We can wrap the lot in with the mortgage, or if they already own the lot, then we use that equity. I get that question a lot. The equity in their lot can be their down payment. So they can really get in with no more money if they've got a decent valued lot. We also do the renovation loans, and we can also wrap the pool in with the mortgage. Certain builders, if they're willing to, and this is case by case with the builders, they have to be willing to have that contract of the pool contract under in their contract. So basically they're subbing it out. We do primary and second homes. And I think somebody else, I don't know if Carol touched on, we definitely qualify the builder. That's really important. They've got to, have strong financials. We look at how they pay their subs. So it's a protection for the borrower, 100%. So they're during construction, all they're paying is, interest only on the draws. Now, if it's a veteran, they actually don't pay interest. So they actually do not have any payments during construction. So there's great opportunities out there. I do tell people sometimes, right now, because of COVID, we're still doing everything, but we have increased our loan, our credit score requirement a bit. So you got to be relatively strong, and you certainly patient and willing to wait for that dream home. So I love working with new construction and builders. So any other questions, give me a call. I'll turn it over to you, Lucy.
Awesome. Thank you. That was some great information. I'm glad you brought up the veterans. Does anybody have anything to add to the topic and just in general that maybe they thought of, or maybe after hearing the lenders? I'd love to hear.
I'd actually love to ask a question to the lenders on the table here.
Absolutely.
I would love to hear a breakdown of the difference between a regular loan and a loan that's including that renovation component. I'd like to know, what's different for the consumer?
I'm actually doing one right now. I'm doing a Fannie Mae home style. They're actually putting down 3% and financing. The house had a fire, so they're financing all of a new kitchen, a new bathroom. They're going to have $45,000 worth of renovations. The loan it's priced, the rates are just a slightly little bit higher than a typical Fannie Mae product, but they take the 3% down is based on the purchase price plus the renovations. Okay. So they're financing 97% of the total purchase price plus the renovations. Does that answer your question?
So it's a higher down payment, but you're being
it's still 3% down. But the 3%,
the price that's being taken from is that including that renovation.
Yes.
3% of the projected
cost total.
I wanted to make sure that was really clear. I've got a couple of people I'm going to have viewing this who definitely need to know that.
Yeah, but they got to get the issue that we're running into, because I've got the purchase contract sitting over here that's the clock's ticking away to close on this particular date. But she's having a hard time getting GCs to come out and give her quotes for the repairs. So you got to make sure that the realtor knows I need some extra time to get the loan done. And these are things that are outside of our control. But it's a good product. It's out there. Use it, especially if you want a new kitchen.
Can I just piggyback on that?
Absolutely.
How do permits come into play with that?
They're going to have to get their permits, but they can't get the permits. They can't get the permits till after closing, because you can't have any liens against the property and you can't have somebody already started to get the permits, but they have 6 months to make the renovations.
That's actually where we come in.
Right.
Yeah, because when we are closing, we have, if it's in St. Lucie County, we're required to do a lien search, and that's making sure that there are no outstanding liens on the property that are going to hold you back from owning that property with free and clear title. So you have to have free and clear
commencements ordered, they got to close it out before you can go to closing.
Yeah, exactly.
Can I say something?
Of course.
So our dear realtor friends, sometimes when we start with a client and then they choose, they looked at every resale around and they say, you know what, bring me back to new construction, and you bring your clients over to new construction, give your lender a chance to match, because as Amanda, Carol, Gail and I are saying, we do have a lot of options. We do have a lot of products that could benefit your buyer, and it's not just the new construction lender that can bring all of these benefits to them.
Absolutely.
Yeah. I'm so glad you pointed that out, because you don't want to have to start all over again with somebody new. You already have a relationship built.
Right.
Absolutely, yeah. And a lot of times, yeah, they do have their preferred title or mortgage companies in-house, which is fine, and that's great. It's never bad to do your due diligence and find out from who you already know. So at the end of the day.
And most of them are flexible. If they know that that's the difference between making a sale or not, they're going to be willing to work with another lender. They just won't, give all the benefits that they might to someone using their preferred. Yeah.
And
Absolutely.
just backing on what Dana said when she spoke earlier, it's so true that a lot of the things that appear that they are getting paid for them are hidden elsewhere, and it's only going to be identified and be able to compared if they've come to people like us that can look and compare for them and tell them.
I totally agree with that, because what I've had to tell my clients before and continue to repeat that, there's no such thing as free money. You see all these advertisements,
Yep.
$5,000 towards closing if you use our lender. Nope. Look at the fine print. Talk to your other lenders. That's why I always say you have to have that team around you, because that team that you build around you has your best interest in mind for them, not just for the company, but for you. So that's what I would say to some people watching this, that it's very important to just have your team, most importantly, your realtor and your mortgage lender. So.
And Jessica,
you're
you're absolutely right. I wanted to hit that, because it's one of those things. If your lender can't get you the best deal that's going to work for you, they're on your team. They still want you to have the best experience. So they will be the one to tell you, hey, this is gold. This is going to be the best thing for you. Take it, right? Because we want them to remember us when it's time to move on. And maybe they don't need a preferred lender, or just what a great job you did serving them and looking out for them. That's what gains the referral business, not necessarily who they're doing business with. So give your people that you've already developed that an opportunity to shine for you.
Because we're all ethical and we all will do the right thing.
Yeah. Absolutely. We all want the best for everyone that's out there. And it's only in your best interest to look out. I always say to people, just in general, I mean, in title, because we do the closings, people are signing a lot of paperwork, and we want to make sure that you understand what you're signing at the end of the day. But it should be the same case when you're going into those situations where you want to understand what those numbers are going to mean for you. And if you have a relationship with another lender, they can help you with that. And or your realtor. So it's just a great thing to have a team on your side. And we're going to do what's best for you as a client, not what's best for us. It's not about that. It's about making sure that everything gets done properly for you.
Exactly.
Awesome. So I think that was such a great topic. And I think you guys touched on every point in regards to, it's such a large topic to talk about, and there's so many moving parts. I mean, real estate in general, there's like a million things. But that's why we're here every week, guys. We are here every week to educate you guys and let you guys know about, you can get a little bit of an insight on what the industry is and just understand it a little bit better, so that you have a little bit more power when it comes to making those big decisions. That, I mean, having a house is one of the biggest investments you're ever going to make in your life. So now we're going to go into, since it's Thursday's top tips in real estate, we're going to go into the segment where each of these amazing professionals are going to give you their number one tip for the week. All right. So we will start with Alannah.
Perfect segue, by the way.
Yeah, that was great. So my tip this week is going to be a little goofy, but I absolutely mean it. If you are a local shopper, if you're not out of state when you're shopping for your place, my tip for today is, before your inspection period is over, drive by the property, drive through the neighborhood. You have no way of knowing, and if your agent isn't really familiar with that area, they have no way of telling you whether that's a really low incline, whether maybe that home is the lowest one on that street. They can get a really good idea for what different weather might be doing, and be able to pick out possible hazards before you've moved beyond the point of losing a deposit potentially. So that would be my tip for today.
Great. That's a great one.
Good tip.
Cody, do you have something?
Yeah, my tip for today would be to be decisive. So if you are in the market, just know that you are ready. And if you know that you are ready, make time to sit down with your realtor, whoever you've chosen, to go through the list of houses you've chosen so that they can plot that path for you. so that they can put that team together for you, so that they can make it all a seamless experience for you. So just be decisive. That would be my tip.
Absolutely. Real estate's on fire right now.
Exactly. The market's moving quickly and it ain't waiting for nobody.
That's true. That's true. Jessica.
All right. You know, I think I'm just gonna have the same tip every single week, just because I think it's that important. Just build your team and be open and honest with your team. Like, interview as many realtors or lenders or whoever as you want, but be honest and choose that one person and stick with them. And also, if you know if that relationship isn't really working out, be open and honest and let them know that, so you don't have to burn that bridge and go to somebody else. But have that team that you can really depend on and have that open communication. So that's my tip.
Absolutely. Communication is important for everything, right?
Right.
And
Yes.
everything and anything in life, communication is important. Amanda, what do you have for us today?
Well, I agree totally with Jessica. Communication is key, and it's all about teamwork and building that relationship. So that is the most important thing to do. Definitely. Oh, and another one is, please do not enter into any forbearance programs unless you absolutely need to, even when the application process has started. Don't do it unless you need to. And that's it.
That's very interesting. Thank you, Amanda. That's a great tip.
There's a whole subject in
There's
there.
a whole subject on that. That's what I was just thinking. I was like, that's a whole.
Ooh-wee.
Next week's topic.
Yeah, maybe. You guys have to stay tuned for next week's topic. Dana, you're
Renters
up.
beware.
Sure. So am I on the screen? I don't.
Yes.
Okay.
Yeah, during this time we're in.
Okay. So my tip, just again, reiterating what Jessica and Amanda said, stay loyal, but another one is to just be transparent. So if you are laid off and you think you're going to get your job back before the loan closes, just don't take that risk. Just be way up front, hey, I'm laid off. Hey, because we verify employment multiple times throughout the process at this point. And it would just be devastating for all parties involved to find out that you're unable to get approved because you're no longer employed. So be transparent.
I think that's a great, open communication is, again, goes in at communication. It's like, you can't lie or try and hide certain things. We can't help you if you don't, you don't tell us everything.
And if we know if something changes, we might be able to help.
Mm-hmm.
Right, so we will find out.
Carol's like, we will find out. That leads into Carol. Carol, go ahead.
My number one tip this week, and I probably said this before, is know your credit score, people. And please do not get it from Credit Karma, get it from a reputable source. And that reputable source should be your loan officer, because our algorithms are different from a car dealer or a credit card, and especially Credit Karma. So please know your score, because it's going to help us get you something that's going to work for you finance-wise.
Love that. Thank you, Carol. Credit scores are very important. Gail.
Yes, and I'm going to tag on to that, because I was thinking credit this week, because I see a lot of issues out there every day. Pay your bills on time. Keep your credit revolving credit to about 30% of the high limit. They really don't like to see you getting maxed out on your credit cards, because that's just a bad sign, and that will lower your score. That's the first thing that happens. So people do need to be diligent, and don't go necessarily buying a $50,000 car just before you're ready to buy a house. That seems to be the order. They get the car and then the house, and then they don't qualify for the house. So just, try to have a long-term plan and keep that in mind when you're getting ready to shop for a house.
Absolutely. Love that. And mine is just going to be to relax again. I'm going to go over that one again because I talked about that last week. You know, the real estate industry is crazy. That's what we are here for. You know, I don't know how many people I've talked to where they're like, yeah, but a realtor costs money or whatever it might be. Or, you know, they don't even understand the whole perception of it all. And a lot of times it's going to save you a lot of money in the long run to just work with your professionals, because we know the industry. We are in it every single day. We are living, breathing real estate. And, you know, we want to help you guys and make sure that you guys are making those informed decisions. So don't ever feel like you ever have to do it alone. The online is a very powerful tool, but we are even more powerful. So
Yeah.
reach out to the amazing professionals that are here on with you today. You can get their information that is in the description of this video. You can reach out to them specifically if you have any questions for them. A lot of them have talked about a lot of great tips, and we come here every Thursday. Does anybody have any announcements or last minute things that they want to add in for the week?
Don't get super excited about a new build that looks like it costs less than a resale until you run it by your professional. I feel the need to throw that out there. I have just been under a lot of pressure this week to explain that repeatedly. So do your due diligence, present it to your agent and ask them why, and they will tell you.
That sounds great. I love
Sorry,
that.
that's my announcement.
Announcement.
My
Hello.
announcement would be to take a look at my Facebook page tomorrow. There will be something there. I just can't speak of it today yet, but we'll be there tomorrow.
Stay tuned.
You heard it
for
here
something
first,
exciting on
folks.
Codys page next week. Tomorrow.
Right?
And you guys should all go and follow everybody's Facebook pages. Again, their
Yeah.
links are in the description. So go follow them. They have great content that they put out all the time. So yeah, just be informed. And we will see you guys next week. Every Thursday, we do Thursday's top tips in real estate here at 2 p.m. What time was that, guys?
2 p.m.
And we will see you guys next week for another topic. So stay tuned for what that topic is going to be. And we hope you guys have an amazing week.
Okay. Bye.
Bye.